Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And as you pointed out earlier, Europeans probably want a lower euro, not a higher euro, so they can export, right? Although there are conflicts there with Spain, Portugal, Italy. It's a messed up situation.
Yeah, and it's been it's been messed up from the start. Structurally, it's just a screwed up system. And the reality is those countries cannot compete against Germany. If those countries had their own currencies, they could devalue them, and on a relative global basis, have exports could be competitive against Germany. They're locked in the system, which ultimately is a lose-lose for them, because they'll never be as strong as Germany. They'll never be as efficient. And they wasted about 10 years of low interest rates and low capital, and just had a consumer binge and didn't build efficiency in their manufacturing process, which was the original goal of allowing them to borrow at German interest rates, and they didn't do it. But most countries wouldn't have done it either, so now they're stuck. That's why we think ultimately this thing's going to come apart. It may be later than sooner, but we just think it's over sooner, at some point.
Chip has one other comment. I guess he says we talk about this vicious circle and the fact that Europe needs a weaker euro. What happens if the dollar falls? Where's the money go? Right now, isn't a lot of money, hypothetically going into gold because people don't know where to put their capital in any currency, so they're putting into gold? Does that make sense?
I think it makes a lot of sense. We're very, when we say this and we mean it, we're agnostic on gold. We're not gold bears. We're not gold bulls. We're definitely not gold bugs. But it just makes a lot of sense when you see what's going on in the world. And you see, as we just talked about, the relative choices in the currencies, with the Western countries just making their paper look worse and worse with the things that they're doing in order to try and stimulate that's not working. You go, where do I hide? It basically becomes, where do I hide money? And gold is the other alternative besides the U.S. Treasury market, short-term paper, because it to us makes a lot of sense. And that's why when we look at that, we said when you look at this gold, let me go to it here, is why we're watching that euro gold chart and seeing that interesting correlation here. As the euro goes up, pressure coming out of Europe, kind of an ebb of all that concern that it was going to explode, so money comes back out of gold and goes into standard investments. But as this starts down again, the euro breaks again, we think gold is going to go right back up, and all that portfolio money that hasn't gone and hid in U.S. Treasuries, we think will pour right back into gold. So it makes a lot of sense.
Incredible. Chuck, I want to thank you. I want to give you a moment to just give us any closing comments you might have. And just, I guess, briefly, I know you talked about your new newsletter, Currency Currents Professional, but just briefly, just touch on that again. And also, if you would mind reminding everyone about that yield interest differential between U.S. bonds and German bonds, if anybody wants to send you a quick email.
Oh, yeah.
Some people might be interested.
Sure. Let me just start with that. We're at info at blackswantrading.com. If you send an email there, ask for that chart, I'd be happy to send it. It's just a comparison chart showing the change in yield differential between the U.S. And Germany on a 6-month basis, and it's so tightly correlated with the movement of the dollar index. It's very interesting, and we do that type of thing every day in our newsletter. We put charts like this up. We have a chart library section in our newsletter every day of things and interesting indicators or interest to us that we do. We try and make it a very comprehensive piece in the letter. It's not just about buy this, buy that. We try and provide this type of research so you can validate your own ideas and see some trade setups that you like. We look at a lot of other intermarket classes, so even trade setups, if you're trading outside of the dollar, we think that it can be useful because, at the bottom line, we want to make it a quality research piece But of course, we want to make our recommendations work over the long term from a reality standpoint. And the reality is based on these fundamentals, the technicals, and these intermarket relationships that you see. That this is the type of stuff that we do every day, and this is the type of stuff that we use to trade, and we use to manage money. So it's the same type of stuff that we look at. We hold nothing back in that standpoint. I just like to say, I just wanted to share with you those rationales. We thought they made a lot of sense, but what's interesting, and I think is something that you can, something that we do, and hopefully the takeaway is for you is, as you can see, we had our rationales, but we're looking for information to really invalidate our rationales. And I think from a trading perspective, and Steve and I have talked about this many times, and you put a trade on, you fall in love with it, and and then you get destroyed because you're constantly falling in love with it, looking for reasons you're right. This whole process right here, which I've shared thanks to Steve and the ISE, is very good for me because it forces me to think about my rationales, and it's something that I've told John Ross, to try and teaching him to do. That, as soon as you fall in love with the story, you're dead meat. And as you can see, some of our rationales are falling apart. Some of them are in play. They were solid, but they're morphine. So I just wanted to just say that, I think this is probably the takeaway, I think, can help you in the analysis you do. And I said just sharing it with you has helped me, so thank you. And thank you for all the great questions.
Jack, thank you. You always shed light on a very complex subject, and you do it in such a succinct way. So thank you on behalf of the ISE. Really appreciate it. And I'm looking forward to coming back in the next couple of months whenever we have the next one scheduled. And good luck with your currency currents professional. So I really hope that it works out.
Thank you, Steve.
You're welcome. Just want to remind everyone that next week John Jacobson will be with us at the ISE. So please come back and join us. If you're interested in listening, which I'm sure a lot of you are, in getting this or listening to this again, you can go to our website and just click on fxoption.com /events, and you can sign up for future webinars. You can go to the archive section and listen to Jack. And Jack's been with us many, many times. You could go back to the ones we did in the spring, and as Jack talked about in the winter, and you could just follow all of his presentations. And I think it'd be very helpful in learning more about, if you're interested in currency trading and especially currency currents professional, you'll see the professional work that Jack does. And you should go and contact blackswantrading.com or info@blackswan. It's really about your own decision making. You have to decide if it makes sense for you, but Jack offers a tremendous amount of research. So please check it out. And I want to thank all of you for attending. Without you, we wouldn't have the webinar. So here I just wanted to, a couple of spots that you should check out. www.blackswantrading.com. The email for Jack is info@blackswantrading.com. And they offer their currency currents professional. They also have managed currency program if you're interested in that. So please check it out. And John Jacobson will be back next week, and you can check out John. And the slides are available via archive. So if you want to, again, listen to Jack, all of the presentations, you can go back. So I want to thank you for attending. On behalf of the ISE, this is Steve Meisinger wishing you a happy and safe trading day tomorrow. And please join us for future webinars. Don't forget fxoptions.com. Great place to learn more about all the different things that are going on in the options world. So again, thanks again, Jack. Thank you. Take care. Good night, everyone.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.